Asia's equity capital markets have finally roared back to life in 2025, marking a dramatic turning point for the region. For the first time since 2021, deal-making activity has surged, signaling renewed confidence and momentum. The total value of equity capital market deals has jumped to $267 billion, a 15% increase from last year, breaking a multi-year decline. This isn't just a blip. The pipeline for new listings is packed, promising strong momentum into 2026. From Hong Kong's trading floors to Mumbai's startups, anticipation is high as investment bankers prepare for a wave of high-profile IPOs. Hong Kong's Hang Seng Index has soared nearly 30% this year, fueling a virtuous cycle of rising stock prices and new listings. India's benchmark index has also climbed over 10%, providing fertile ground for companies and investors alike. The global financial narrative is shifting eastward, with China's recovery and India's expansion reshaping capital flows. This awakening is more than a rebound. It's a sign of deep economic transformation and Asia's growing role in the world economy. The deals being made now are laying the foundation for tomorrow's corporate giants. Asia's markets are no longer in the shadow of the West. They're setting the pace for global growth.
At the heart of Asia's market revival are two powerhouses, China and India. China's determined recovery, backed by government support, has restored investor confidence and reignited capital markets, especially in Hong Kong. India's story is one of robust, long-term growth, driven by a young population, a rising middle class, and pro-growth reforms. China brings scale and tech ambition. India offers steady, diversified expansion. This synergy lets investors balance risk and reward within Asia itself. James Wang of Goldman Sachs expects both countries to remain central to deal flow in 2026, marking the start of a significant cycle. The twin-engine model provides a buffer. If one market stumbles, the other offers stability. The story of 2025 is these two engines firing in unison, making Asia a regional powerhouse for global capital.
Hong Kong and India are leading Asia's equity market renaissance. Hong Kong has staged a stunning comeback, raising $75 billion in deals, triple last year's total and the highest since 2021. Over 300 companies have filed for listings, spanning industries from tech to renewables, underscoring deep market liquidity. Hong Kong is once again the go-to venue for ambitious Chinese firms with global aspirations. India's IPO market remains strong, with $19.3 billion raised and more to come from major listings like Meesho. The slight dip from last year reflects a high bar, not weakness, and banks expect another $20 billion in IPOs for 2026. Hong Kong's revival is driven by large Chinese listings. India's by a steady stream of domestic growth stories. Major deals like CATL's $5.3 billion Hong Kong listing and Reliance Jio's anticipated IPO highlight the region's diversity. Together, Hong Kong and India offer investors a dynamic range of opportunities fueling Asia's equity boom.
An IPO transforms a private company into a public one, unlocking access to vast capital for expansion, innovation, and global competition. For Asia's tech and industrial leaders, going public is the key to scaling up and cementing their market positions. A successful listing boosts credibility, attracts talent, and provides a transparent valuation for future deals. It also creates liquidity, allowing early investors and employees to realize gains. Recent IPOs like KTL and the upcoming Reliance Jio listing show how these moves fund ambitious growth and reshape Asia's industrial landscape. These IPOs are strategic milestones, not just financial transactions.
A major driver of Asia's equity boom is the global pivot, away from U.S. assets toward Asian markets.
Investors are increasingly wary of U.S. political and economic uncertainty, seeking diversification and growth elsewhere.
Asia's strong fundamentals have made it the prime destination for this capital migration.
This is a classic response to risk. When turbulence hits the West, capital flows east.
Investors aren't just fleeing risk, they're chasing returns. The 2025 Asian market rally reflects both deep liquidity and appetite for innovation.
The narrative is shifting from a US-centric world to a multipolar one, with Asia at the center.
The performance gap is striking. Hong Kong's nearly 30% gain is hard for global fund managers to ignore.
This momentum attracts more capital, fueling further gains.
The shift isn't just tactical. It's a long-term structural change in global investment strategy. The twin engines of China and India offer a compelling, independent growth story.
To capture the next wave of global growth, investors know they need significant exposure to Asia.
The current boom is both a cause and effect of this great migration, a trend likely to define the decade. Asia is no longer just an alternative, it's a primary engine of global capital flows.
Despite the optimism, concerns are rising about the explosive growth and soaring valuations in Asia's AI sector.
An asset bubble forms when prices soar far beyond fundamentals, driven by hype rather than real performance, exactly the fear with AI stocks. China's IPO pipeline is packed with ambitious AI firms like Zhipu AI and Kunlunxin, aiming to raise billions. If these companies can't deliver on their promises, stock prices could collapse, triggering broader market sell-offs. Recent volatility in US tech stocks is a warning sign.
A major AI sell-off could sour sentiment across all sectors, making it harder for companies to raise capital.
Many AI firms aren't profitable. Their valuations hinge on uncertain future growth. Investors are paying a premium for the next big thing, but the risk of disappointment is real.
As corporate spending on AI is reassessed, investors may rotate toward quality, cash-generative companies. The big question for 2026: can the AI hype last, or is a painful reality check coming? Amid the boom, experts urge caution, especially about the sustainability of the AI-driven rally.
The real debate is whether current valuations reflect the true timeline and profitability of AI's commercial impact.
Many AI assets haven't even gone public yet, making their true value hard to judge. Experts warn that a major AI correction could ripple through the entire market, affecting IPOs in all sectors.
This contagion risk is the biggest unknown for 2026. Heavy reliance on a single theme makes the market vulnerable.
Investors are starting to shift from speculative growth stocks to quality, cash-generative names with proven business models.
This trend signals a maturing market, with more discerning investors.
Still, optimists like James Wang believe China's recovery and India's expansion can support the market, even if tech stumbles.
Deep liquidity and the ongoing capital shift to Asia are key strengths. While AI bubble fears are growing, many believe Asia's market revival has a solid foundation. The next year will test whether optimism or caution prevails. China and India offer contrasting opportunities and risks in Asia's equity boom.
China is betting big on AI, with its IPO pipeline dominated by tech firms aiming to rival US giants.
This high-stakes focus offers explosive growth potential, but also exposes the market to bubble risks if sentiment shifts.
Investors are betting these Chinese AI champions can justify their lofty valuations soon.
India, meanwhile, offers a more diversified IPO market: consumer goods, finance, manufacturing, and infrastructure.
This makes India more resilient if global tech sentiment sours. Its market is grounded in real economy growth.
Global investors face a choice: embrace China's high-octane AI ambitions or India's steady, broad-based expansion.
Many will balance both, using Asia's diversity to manage risk. The contrast between China and India is a key strength, allowing capital to rotate and keeping Asia attractive regardless of tech sector swings. Asia's built-in diversification is its secret weapon.
As 2025 closes, Asia's equity outlook is a mix of opportunity and uncertainty.
Major IPOs like Reliance Jio and Zhongji Innolite are set to anchor the market in 2026, with China and India driving deal flow.
The fate of the global AI rally will be the key test. Successful listings could extend the boom, while failures could chill the market.
Investors will need to be selective, focusing on valuations and fundamentals as volatility rises. The trend toward quality, cash-generative companies is likely to accelerate. Diversification between China's tech focus and India's broad-based growth will be crucial for managing risk.
2026 will reveal whether Asia's growth is sustainable or overheated. The ability to separate durable growth from hype will define success in Asia's ongoing equity story.